So morning and welcome to the second, or not the second, this is probably like the fourth overall Liaising with Legals webinar that we've done. It's certainly the first this year in 2024. It is the 29th of February today, which is obviously a unique day. You don't get them very often, do you? My name's Daniel Edmondson. I'm the National Account Manager here at AdviseWise. I'm joined by what expertise we've got on the call, really. So just going through the individuals just to welcome them to the call, and I will absolutely give them a chance to formally introduce themselves in a second. But yeah, so just to go through the list if I can. So we've got Peter Barton, Barton Law. We've got Matthew Taylor from Equilaw, David Burns from Enact Conveyancing, Adam Carnall from Forever Legal, and Rachael Brandon from Boyd Legal. For anybody that's jumped on some of our sessions in the past, you will know that we've never really had a Scottish representation before. So Rachael, this is a welcome addition, and hopefully we can glean some insights and perhaps some different terminology for some of the quirks and differences that may happen in the Scottish region. I can imagine the volume of business you will be doing on the call will be based in England, but just so happens if you get one of those cases, you'll be well equipped to be able to deal with that. Just before I hand you over to the speakers for a bit of an introduction, I'll give you sort of the housekeeping session objectives, and then a very quick market overview is what's happening, or certainly what I'm seeing happen today. But the whole idea behind this session is to go through some quirky legal cases, some case studies, give you a bit of a rationale and some idea as to how you can work collaboratively with the legal partners. You know, often it's at the end of the transaction for your clients, and it's often an oversight when it comes to what might be included. And, you know, we all get CPD to the max on criteria and features and benefits, but we don't often look at what's actually going to happen throughout the legal process. So that better understanding is undoubtedly a benefit to you and your clients. So practical tips, working collaboratively, managing clients' expectations, that's all on the learning outcomes for today's session. A bit of an update from myself, and before I do that, the housekeeping. Obviously, this is a webinar. However, and I'm writing a paper on this, by the way, I want to kind of make this a bit more of a workshop. I want to make it more collaborative and engaging. So, you know, yes, you can keep your mics muted, but if you have a question, we very much encourage you to unmute and come and join us and have a bit of a discussion. Similarly, with your cameras, if you have terrible internet signal, obviously it helps to have it off, but, you know, you're more than welcome to turn it on so we can see your lovely faces here as well. This is CPD accredited, so we will follow up with an email likely this afternoon with a link to request your CPD certificates, and we will endeavour to get the recorded webinar onto our AdviseWise platform on the upskill section either later this afternoon or certainly first thing in the morning. If you haven't already, so we've advertised this across LinkedIn and a few different socials. If you're not registered with AdviseWise, I'd encourage you to do so. We'll pop some links in the chat as we're speaking. On the platform, it's free to use. You'll see loads of latest news and industry events. You'll keep on top of some of the rate fluctuations, and naturally you can follow us across socials as well to keep in the loop. You can obviously get in the know of any other recorded sessions or any other webinars that we'll be doing in the future. So next Wednesday, the 6th of March, we've got a webinar with Standard Life Home Finance, introducing the new Horizon rewards plan. We've got, towards the end of March, we've got effective later life marketing, and then we advertise lots of external events on there as well that's obviously relevant to you and this sector, which is obviously later life advice and lending. So the MBE in Manchester is happening on the 19th of March, and obviously the annual Equity Release Summit is happening down in Church House in May, but there's a few other thrown in the mix there too. In terms of a bit of a market update from my perspective, just quick fire. The lowest equity release rate at the moment is 5.34. It's up on the week prior ever so slightly. There's a few lenders seem to be in and out the market at the moment with a bit of appetite, but it's nice to see a little bit of appetite nonetheless. Gilt rates, as literally checking in the last 10 minutes, 4.431. That has fluctuated between 4.2 and 4.4s over the last couple of days, but over a bigger picture, over that certainly the last month, it's been fairly stable, and stability is certainly welcome in my eyes. Inflation set for the last 3 months, it's still at 4.2. There's obviously been some changes there with the rising cost of fuel and food prices and so on. A date for your diary, certainly when it comes to the base rate, we know that that's held at 5.25. The next review date for the Monetary Policy Committee is the 21st of March. So hopefully a little bit movement, more favourable movement for us and our sector there, because it all does impact what we're doing with our clients. It's great to see some product innovation from some of the lenders as well. We're seeing the introduction of these hybrid style products with optional payments, or sometimes in some cases mandatory payments. Hopefully everybody's finding them well received and getting upskilled on those. If you don't join the Standard Life webinar, we're happy to talk through some of those innovations soon. Multi Life have also come back to the market with tailored as well, so those medically enhanced plans. In terms of platform activity, again, on the theme of stability, this month so far, we've seen 10 rate increases and 9 rate decreases. So just a few adjustments here and there. Normally it's one way or the other. So that indicates more stability in my eyes. If you compare those 19 changes this month to 36 in January, 41 in December, and 54 changes in November, we're in a good place now, certainly when it comes to stability. But that's enough for me. I will pass you through some of the guest speakers on the session today, just for a couple of minutes, just to give them a bit of an insight into their proposition. But if I can start from, we'll go north-south, shall we? So we'll start with Rachael up in Scotland from Boyd Legal, and we'll go through that. Hello.
Hi, good morning. My name's Rachael Brandon. I'm a director of Boyd Legal, but I also head up the Equity Release Department and team. So Boyd Legal are predominantly based in Edinburgh, the Central Belt, at the West End. However, we do have an office in Kirkcaldy. But in order to meet clients Scotland-wide, shall I say, we do have office facilities in Aberdeen, Inverness, Glasgow, Dundee, Perth. Basically as far north and as far west as we can. If a client's obviously not on the mainland, we do get some clients who are in Orkney, Shetland, Isle of Harris, Isle of Lewis. Some clients are happy to travel to one of our office locations. Alternatively, we can use a locum in those circumstances if they want to stay on local. And we would still give the legal advice, but that locum would act as our agent to sign the documentation, provide us with the ID, and confirm that the clients have sound mind and not under any duress. Obviously, we at Boyd Legal prefer to meet clients face to face. I think it's just more seamless and quicker. However, we do on odd occasion have to instruct our locum solicitor. At Boyd Legal, there's a department specifically designed for equity release. We have 7 staff members and 5 solicitors that are employed solely to meet those clients. So the caseload that you give us is not then intertwined or put to the bottom of a conveyancing pile. We are dealing with day in, day out equity release, and that's all we deal with. But we can do other transactions in-house, so conveyancing, conveyancing and transfers of title, stuff like that. So if a client needs to buy and sell a house, we can do that. We can also do estate planning. So we're a one-stop shop in that respect. For brokers, we don't have a platform, but our working database, you'll get live updates as we hit each milestone. And I think that keeps the relationship with the broker, more personal than rather logging onto a portal and seeing where we're up to. So at the moment, that is working brilliantly because you're getting constant live updates as to where we are in the transaction. That's it at the moment for me.
Fabulous. Thank you very much. Adam, over to you. I think I'm working geography north-south.
I think, that's about right. So I'm Adam Carnall. I'm Director of Partnerships at Forever Legal. So our head office is in Altrincham, near Manchester. We operate in England and Wales. We have a team of employed visiting solicitors on the road, supported by the in-house team covering the whole of England and Wales. In terms of unique bits to our service, I would say our agents are all Forever Legal solicitors, employed, so slightly different to how others operate. What we also do is we record appointments in the client's home by video and or audio as well, which gives added protection to the advisor and the lender, and protecting yourself. So anything that's said in that meeting is there for life should it ever be challenged in the future. It also is really good at identifying vulnerability, any coercions, and from a consumer duty angle, we think that ticks that box quite well for us. In terms of other services, as Rachael alluded to as well, with Boyd Legal, we also do residential conveyancing in-house. So any aspect of it, so if you've got a purchase, we can handle the sale, the purchase and the ER element. Alternatively, if brokers are looking at utilising RIOs or later life lending products from building societies, we can also do the conveyancing on that. In addition, we also have a private client team as well. So we can look at wills and LPAs for clients alongside equity release, if you're looking to do that, or as a standalone. And in terms of supporting advisors, I've got a dedicated advisor support team and BDM team who are there to help you with any queries, questions, pre-instruction, post-instruction, regular updates from the team in terms of how cases are going through, online case tracking portals, and all those good things. But yeah, as I say, I'm really, really pleased to be on the call with my fellow specialists, because it's really important that advisors use specialist solicitors, particularly when they're looking at areas of specialist lending such as equity release. So yeah, great to be here.
Fabulous. And then coming over the M62 over towards Yorkshire, we've got Dave Burns from Enact. If you could go for an intro, Dave, that'd be great.
Thanks, Daniel. And learning a bit of geography as we go, which is always nice. Apologies for my lateness, technology issues, but glad to be joining everyone today. Enact are a specialist lender conveyancer, so we're on the other side of the transaction from most of the speakers today. We process a large volume of both residential and equity release remortgages on behalf of the lenders, but we also have a significant sale and purchase department, which is direct to customers. Equity release has been a huge growth area for our business over the past few years, a very exciting market that we keep wanting to progress within. Having engagement with other stakeholders in the process is absolutely vital to that, so we can understand how to develop, where to automate, and what level of communication is needed across the span of stakeholders. So really pleased to be on the call today.
Fabulous. Thanks, Dave. And then if my geography serves me right, we may as well go on the same theme. Down the M1, across to Birmingham, down the M5. Who's more north? I think it's going to be Matt from Gloucester, Cheltenham, isn't it? Go for it, Matt.
Yeah. Morning, everyone. Yeah, I'm Matt Taylor from Equilaw, Business Development Director. We've been around since about 2010, so not really much we haven't seen in the later life space. We're specialist lifetime mortgage conveyancers, but we do also look after RIOs and other later life finance plans. Cover the whole suite of additional work as well. So as some of the other guys have said, your purchases and lease extensions and the things that might be going on alongside the later life borrowing. Last year was a challenge, as we all know. We spent a lot of time working on sort of new systems, CRMs, process improvements, and really focusing on that client journey. So that's a big thing for Equilaw at the moment. We cover all across England and Wales through our solicitor network. And again, hopefully today can cover some good ground around the importance of using a specialist firm to do the conveyancing, whether that's any of us on the call.
Fabulous. And last but certainly not least, from Bristol, live, but he's not in Bristol today.
the southerner. Okay.
Yeah.
Thanks, Daniel. I'm Peter Barton, MD of Barton Law, previously of another firm which will remain nameless. Like everybody else, we all seem to share the same unique offerings. Apologies, Adam. And I'm pleased to announce that my restrictive covenants from the old place have expired. So we now have our own in-house conveyancing team, whereas previously we didn't because we were under restrictive covenants. So as Matthew said, I think sales and particularly purchases and porting cases, especially important to have a specialist solicitor rather than relying on the interesting service provided by third-party firms who may not be as used to equity release and may result in their clients facing early repayment charges, which we've seen recently and had to rescue. So we do now do in-house sales purchases, lease extensions, deeds of variation of the dreaded solar panels, ground rent, and that sort of thing. So other than that, it's, although we're probably the furthest south of everybody, we do cover England and Wales, but I wouldn't step on Rachel's toes up there up north.
They might not let you over the border, Peter, up there. I've lived on the borders. It's a tough place. No, that's brilliant. Thank you very much. And just a reminder for everyone, you know, we want this session to be as engaging as possible. But please don't be shy. Chuck your questions in the chat box. Hopefully you've found it at the bottom of your screen, and/or unmute yourself, and you're welcome to chip in at any point. But you know, question to the room is there anything initially before we start getting into the nitty gritty, the bread and butter? Anybody on the call wants to ask a question initially? Got any tough cases on your desk? Take advantage of this time, because it's not very often we get all the guys on the call all at once. Okay, I'll give you a second to think about that, and certainly utilize the chat box. But I want to segue straight away, and the guys definitely mentioned it throughout, sort of their experience picking up cases perhaps from non-specialists. So the question straight away, and I think Dave, you'll get a really good insight into this coming from the lender's representative side, is just, you know, the role of the specialist. How beneficial is it actually to the customer? How good is it in terms of the fair value assessment and fees to clients? Obviously, that the guys will be able to explain that point as well. But probably from your perspective, Dave, what's the benefit of working with the guys on the call today, as opposed to, you know, Joe Bloggs on the high street, who's been a family solicitor for donkey's years, maybe isn't as confident?
There's many reasons for using a specialist. I can keep it incredibly simple and tell you the cases go through quicker with the specialists than non-specialists. We've got months and years of data that shows that as a regular pattern. There are a number of reasons for that. There's the practical reasons. We are connected with these firms. You know, we have email links with them. We have regular contact with them. They know exactly the requirements of Enact as a firm, the requirements of the individual lenders. They're prepared and ready to go with exactly what we need as soon as we need it. When it comes to the service to the customers, it is a specialist process. Being able to correctly advise and assess the needs of that customer, which can be particular needs given the base of customers that we're looking at here. The comfort of having a specialist and knowing that they've done the right thing is best for all concerned, in my opinion. The final point that I would like to make is a little bit less tangible, but it comes down to the working relationship that all the guys on this call have built up with Enact, I'm sure with other lender conveyancers. When tricky cases come up, when there are problems, when things don't fit into the nice little box that we do like them to fit into, they can pick up the phone, they can suggest different ways round. They've got lots of experience, and we can talk to them about the way to resolve these issues. And we can trust them because we know that they've solved things before, and that they follow through on what they've done. So I would always say, go with a specialist. They know what they're doing. And it's going to be better for the clients.
Fabulous, thanks, Dave. And I certainly know from my lender days that there'll be processes in place, automations in place. You can accept documents and details that you possibly otherwise wouldn't be able to from Joe Bloggs, who you don't have a professional relationship with, as well. So that's really interesting. I think that kind of on the same theme, and moving that to the rest of the speakers, that's certainly in the view of consumer duty, and I mentioned already that the customer's fair value assessment. I personally see that specialists generally have fixed fees, all the disbursements very clearly disclosed up front. So when we're considering value and that value assessment, it's pretty straightforward. But you guys will probably have a lot more insight into that in terms of what you're perhaps up against. So yeah, is there any comments? Perhaps Adam, could I come to you on this one?
So as I say, with, like, as Dave said, the number of, I mean, I always say, if you're an advisor advising in a specialist area, which Equilaw is still seen as a specialist area, you use a specialist lender. And if you have a problem with that case, you go and speak to the lender about that case. If you've got a query, before I submit it, I want to talk to you about this, that, and the other, you would go to lender and speak to said lender about that. So why we, all of us as specialists, are there as an extension to that advisor, to say, look, we're happy here to help you. We will work. Everybody works for free in this business until completion. So nobody gets paid until completion, and that includes pre-instruction. So, you know, we're there as a resource. We've got lots of expertise in house. We've got vast years of experience with solicitors, private clients, whatever. I know, you know, Peter's like I've seen heard him speak on LPAs and wills and stuff like that before. He knows his stuff. You know, we're there to help you. And I think it's an area of specialist. And if you're not using a specialist, as Dave said, it will take longer. Something will come up in the process that they've never seen before, which they then might outsource, or they'll just ignore it, because unfortunately that does happen. You know, we're all pretty quick at getting cases through. Category 1 cases, in theory, should go through without much of any problems. But then if you've got something, I don't know, you need a lease extension, transfer equity, something like that, this is our bread and butter day in, day out. Cases are only as complicated as the person who's dealing with it makes it. At the end of the day, you know, it doesn't matter if it looks like the most complex case on earth. There is no doubt that we will all be able to deal with it. So use a specialist solicitor. We have fixed fees. Everything's done, no completion, no fee. Everything's transparent. Everything's agreed up front with the client. If you want to know what those costs are before you submit the instructions, so you build that into your advice. If you know, if we know LTVs, if there's been pressure on LTVs, if they're paying off an interest only, and that's a little bit tight, and they want to know, look, what's that fee going to be, because they need to build that in to maybe pay for it, etc. Then, you know, we're there to help. And if you go to the high street, a lot of them don't want to deal with it, so you might waste time in trying to find somebody to do it when actually the clients have got a need for the money, or somebody say, oh yeah, I'll do that, and the reality is they can't do it. So, you know, there's lots of specialists to choose from. We all work in slightly different ways. A lot of them will have long-standing relationships with others. Just use the expertise that's on hand. The same way that you would go and speak to a lender about a case, speak to your specialist solicitor about the case. We're here to help.
Great stuff. That's brilliant. And if any of the other speakers want to jump into that, you're more than welcome. But I think, you know, the theme is fairly consistent there. You know, a client will come to you as a specialist advisor. You go to a specialist lender. Why don't you carry on that theme using a specialist solicitor? It makes sense for great customer outcomes. There is a question in the chat from Louise, and thank you for that, Louise. Can somebody please explain OS1 for new builds, please, and why does it seem to appear late in the process? Presumably you've got a case on your desk with that at the moment, Louise. So, yeah, does anybody want to jump in on that, or are we? Peter's always very technically minded, or Dave might have something from the lenders.
Yeah,
I'm happy to go on, Dave. Age before beauty.
I'll give the basics, Peter, then you can give the technical reasons. So the OS1 is there because checks are done on the title at a certain point in time, and then various bits of the process need to continue on from there. But the solicitor completing the transaction needs to know that what they've checked previously is still the title, and that nothing's changed. So that OS1 will give them that view of any changes that's happened on the title. It will also provide priority over that title so that nobody else can submit a change whilst the transaction is being submitted for registration. I think the other part of it is, why is it so late in the process? They only last for 6 weeks. So it would tend to be at the end of most transactions that would be done.
Fabulous. Thank you. Anything to jump and bolt onto the end of that, Peter?
No, I think Dave summed it beautifully. I think for me it is that protection element, and because it has a shelf life, a very limited shelf life. You know, the likes, you know, Dave and that will only do it at the very last minute when they're ready to set completion, almost, just to kind of protect whichever lender they're acting for.
Can I just ask then, Peter, why does it not show? It was actually a case that went through yourself, and it was the new build of your director's mother-in-law, yeah? And I can't understand why, when the initial search was there, and obviously it's the landowner presumably had this charge on it, but surely that would have shown right at the beginning, and therefore there would have been an element of forewarning. So I can understand that there might be more than one search done, and one done just before you complete. But all the queries regarding it came up right at the end.
Luckily, I do remember this one, Louise.
Oh, I remember it well.
Yes, no, I saw my co-director's mother-in-law the other day. That was a nice chat. The issue was, I think it was on this particular case, it was it wouldn't have shown on the original OS1 because it was a new tranche of funding that the new build company were doing. So actually, it only came on after the original OS1 had been done. So when the lender solicitors came to do their new OS1, it was a new tranche. I do remember because I spoke to mother-in-law, not my mother-in-law about that at the time. So yes, that was why, because it wasn't showing on the original, because it was I think a second or a third or probably a fourth tranche of funding taken out by the new build person.
Right. Okay. Because the BDM at the lender really didn't understand it, and I know she was trying to get an answer. I think it was Enact, wasn't it? So. Yeah,
Dave and I understood it, didn't we, Dave? It was purely the funding from the new build developer.
Was it? Yeah. Okay. That was just it was just I thought, how come you just couldn't have seen that so early on?
No, they take these funding. I think new builds take it in tranches of whatever phase of the plots they're onto. So I think they were moving on to another phase of building, which is why, and it then plonked it on all of the land that hadn't been sold off.
Right. Okay.
Great stuff.
Thank you.
Awesome. Thank you all, and thank you, Louise, for jumping in there. Another call out to the guys on the call. Phil, Simon, Sarah, Derek, even the lenders. Chris, I can see you in the listen way. If anyone has any questions, please do shout up. But similar on a similar sort of segue for me, I've got a case lined up for you, or a query lined up for you on the theme of sort of things cropping up late in the process. Speakers on the call, what are your thoughts in and around receiving cases with special conditions? It's certainly from my time as a BDM, there are quite a few lenders that are more than happy to lumber a load of special conditions on there. And then there are also, and conversely, some lenders that are very stringent and they will reluctantly go to offer conditioning things like ID or anything like that. Any thoughts, comments from around the room?
I'll just say, Dan, with special conditions, we've, as I say, we've all been doing this a while. When you're having an initial conversation with the client, maybe around by a questionnaire or over the phone, however people do it, if somebody says, yeah, I've got an occupier, or yes, I've got solar panels, or yes, I've got this, yes, I've got that, we can almost preempt what that special condition is going to be. So it's about prepping the client. Okay, so you've disclosed this is what we're going to need to evidence that. It might be even simple things like, have you got an ID and is it valid? Oh yeah, I've got a passport, but it's out of date. Have you got buildings insurance? Yeah, I have. Have you got a certificate? Yeah, I think so. Because we need to evidence all this. So it's all about prepping that client up front. It's not about just getting an instruction, waiting for the offer and going, oh, I was going to swear then, but there's something on the offer that we all of us will be able to preempt pretty much what the offer is going to look like. So it's about getting and again, it's just reiterating why a specialist is important, because this is what we do day in, day out. Speak to the client, right? You've got solar panels. Is it leased? I've got a copy of lease. I bought them. Have you got evidence that you purchased them? Things like that. We all know before the offer comes in, that's what probably the likelihood of the special condition is going to be, and prepping that client. So by the time the solicitor goes to that client's home and does it, everything is ready. This should be, for us, and I'm sure for everyone else, it's about getting that client visit ready. So when we go there, we can tick all those boxes, get it done, and get it back to the lender and get it set, and get it completed. Yeah. And then I'm sure Dave will say, the last thing Enact want to do is be chasing information from solicitors. And he probably rarely has to do that from specialists, but his teams probably spend a lot of the time chasing non-specialists on this type of stuff. So for us and everybody else, I'm sure it's just about prepping that client, and so they go into it with their eyes open, and also the advisors as well. Because if something comes up really early on, so right, this case is going to take longer, you're setting that expectation with the advisor and with the client, right? This isn't going to fly through, and this is the reasons why. This is the likely timescales. And then you don't get any amenity towards the end. No, why is it taking so long? It's all about being upfront, getting the information, prepping the client, prepping the advisor, and working with the advisor as well to get the information as well. Because advisors can help a lot, because they'll be speaking to the client, they evidence a lot of the stuff up front, ID and things like that. We all have to see it, but if we know the advisor's done it, we know the client's got it. So that's half the battle.
Bob, thank you. And obviously, all of these things are leading to delays, right? But potentially bad customer outcomes. And you all know from the front end, you're dealing with the clients, you're doing your quotes with all your lenders. Them offers don't last forever. Rates don't stay the same as much as we have stability at the moment. We've all probably seen a rise in interest rate environment and a fall in interest rate environment, and it can be a little bit embarrassing going back to that client when an offer's expired and you've got a new rate that's potentially 0.5% or even a percentage point higher, it doesn't lead to great customer outcomes. So just to pick on Rachel and Matthew, to give you a bit of limelight if we can. So if you guys can think of any sort of common delays, what do you see more than others? And is there any info around that, similar to what Adam was saying? I know he boxed off and shouted off a few there, but what's the most common delay for you, Rachel?
So at the moment, the main issue is a name issue. So we obviously do a title check at the very beginning of the transaction to see if the property is registered in the land register or the Sage's register, and to see what name the property is under. Often the client's got more middle names, so the instruction comes through completely different to what's on title, and then the offer's sometimes even different to that. So I know with Connexo cases, we can just certify ID, confirm that they can amend the documents, but for Enact cases, we might need a new offer, and then that can delay things in the client's legal name, as they say. So I suppose the brokers have a look at the passport to see what actually that has, because Enact's more likely to follow that than a birth certificate, whereas Connexo will do a combination of both. And discharges is an issue for us because we've got to deal with the discharges in Scotland. So a lot of clients will say, oh, I've paid off my mortgage, that's fine, but it's still showing on the title. So at the outset, we're actually notifying the client it's still there, asking for an old account number if they can find it, and we're sending off that discharge at the outset so that to try and delay any, like, to try and increase getting that discharge back quicker before the offer comes in. Because if we wait till the offer comes in, then that has in the past really caused delays, because lenders are not the quickest at signing these documents. They tend to hoard them in a big bundle, sign them all in one day, and then send them back. So I would say discharges, name issues, and obviously if you're in Scotland and your property's in a Sage's register, you're looking at 2 to 3 months sometimes for a transaction, depending on the complexities with that.
Yeah, we'll come back to the registers and the differences across England and Scotland, I'm sure. But just over to you, Matt. I think we've named a couple there, and the name discrepancies keep coming up on these sessions, so it's obviously important, and we need to keep plugging that. But is there anything commonplace this year for you, or more recently for you?
Yeah, with delays, I guess any particular case can be delayed just based on the complexity and the makeup of it. Some of those are going to be certainly longer in duration. The super complex work, if we're dealing with deeds of variations or lease extensions, and sort of they look after themselves, and hopefully with some guidance from your solicitor up front, that process can be as smooth as possible. Probably at a more frustrating level are the delays around obtaining redemption statements, maybe, particularly if the existing lender is relatively tricky to get hold of, or only provides redemption statements for short periods of time. Undischarged title entries as well, where they've paid their mortgage off years ago, and we're running around trying to find out who we need to speak to lender-wise to actually get that removed at land registry. Clients that maybe are going away for a period of time, and that's not been flagged to us. We can't get that home visit booked. So I suppose you can break the delays down into lots of areas, but those more frustrating ones where particularly if we know as much as as possible as we can do up front around who that lender is, account numbers, old statements, the better really, so we can get on and make sure those kind of admin related bits of work are done and completed promptly.
Fabulous, thank you. Just another call for questions. Does anybody have any off the back of that, personal experiences from delegates on the call? I've got another question lined up that will hopefully give you some good insights as well, but feel free to unmute yourself and shout up if you do have any questions. But yeah, just give you a second for that. Please interrupt me. But if not, question to the solicitors on the call, or the specialists on the call. What's the benefit of an advisor perhaps pulling a title earlier on in that journey? Breaking it down. Pretend we're a layperson and understand what information can that provide, because we know it's going to be pulled anyway by a lender. We know that you guys will be all over that. Is there benefit and value in that earlier in the journey?
Normally brokers email me if they've got a worry about a title, and I would download that for them. But obviously there's 2 registers in Scotland, so they'll be able to see the one if it's digitally registered, but if it's not, it's a different register you have to look at. So most brokers email me because they're asking for the deed of conditions, which is a different topic again. But most brokers just email me and ask if I can download a copy of the title sheet. But it does give them a snapshot as to how the borrowers are designed, like narrated on the deed, on the title, and also if there is any outstanding securities or notice of grants or potential liabilities. So it gives them a bigger understanding of what's happened with that property and what's still showing as registered against it.
And is that similar and across the board with everybody? I don't want to offer in everyone saying you can run a title off them for free. As far as I'm aware, it only costs a couple of quid anyway. So some info in and around that might be valuable if anybody else wants to jump in.
Yeah, if you don't mind, I think as Adam said earlier, for me, it's probably the most crucial part of the process, other than obviously the advice that the advisors give. And it would tell early doors whether the case will go through smoothly, are there any hurdles to be crossed, or whether just don't bother wasting your time even advising the clients. If you see, it'll show things like if it's a leasehold property, whether the ground rent offends the rules, if the lease is long enough, sinking funds. If you see a title deed and there's, as I saw this morning, 45 years left on the deeds, and you speak to the client and the client's like, well, I can't be bothered to extend it. I've got no family. Why should I bother spending 40,000 or whatever? It spots those problems. It spots, as Adam said, the name issues. In a very simple one, it spots whether the owner's joint tenants or tenants in common, which has massive implications as to potential reserves, will, trusts, all those sort of things. So for me, and I know the same applies for everybody on the call, I like to be talking to advisors, before they've even spoken to the clients, and that's usually 3 to 6 months, so often before the app is even signed up, so that that they can, at the time we get to do our home visit, the client has a nice little pile of things that we will need to get that case through.
Yes. Thank you, Peter. Any more from the rest of the speakers? No. Any questions from the room? No. Easy goes. Right, on to the next topic then. David, coming over to you if I can, please. This was really just to better understand at the moment what the average turnaround times are. And the reason I'm asking you is obviously volume conveyancer, and you see it all from the lender's perspective. So if anyone's seeing volume here, it's yourself at that scale. So what can we expect in terms of instruction to completion on average, in days, if that's simple for you?
Yeah, thanks, Daniel. In terms of what we can expect, there is no guarantee with the turnaround time of a case. So
sounds like a solicitor response.
On record, giving exact timescales. I think over the past year or longer, we've seen the quickest turnaround times that we have ever seen in the market. A large amount of that is due to the market reducing, the volume going through being less. So capacity at every stage is there. That there's been no holdups, but also firms, the lenders, firms like ourselves, the specialists, have been able to put process enhancements in place, and look at how the end-to-end journey is working to make it as quick as possible. Your clean kind of vanilla transactions shouldn't be held up. They're fairly boilerplate. It's a well-trodden path, and I would expect them to go through promptly. I think it's always better to slightly under-promise. So if you're telling your clients to expect it to be 4 weeks from offer, I would hope it to be quicker than that, but that's a good indicator to give them. I think it should always be managed as early as possible, that investigations into the title are made, checks are made, things will come up on the survey. So there can't be guarantees on this process, and if there are customers who are in urgent need of funds, I think it just needs to be managed so that they're not spending money before they have it, or getting into a position where they're reliant on a certain date until that date is actually confirmed. But as the others have said, additional legal work, extending a lease, these type of things are going to take longer. But if it's a simple loan on a clean title, there shouldn't be major hold-ups. And if there are, feel free to question those, because it shouldn't be happening.
Awesome. Thank you. And that kind of helps us segue onto the next part of it. You know, when volume does increase, inevitably this is a market that's growing. We can't deny that. When we get back to that $6+ billion market and cases are everywhere, you know, what processes do you guys all have in place to help assist that? Obviously, some of you have significant sales teams to help get out there and manage expectations and get the proposition out there. Some of you may be leveraging tech platforms for customers and stuff like that. So, you know, feel free to, let's have a discussion about that. But if I can go, Peter, I believe you've got some pretty cool systems up front.
Yeah, we've managed to kind of actually use IT for once, other than the old place we weren't able to. So we, as with all the panel solicitors, we have a portal for the advisors. We also have a client app, which they don't have to do the whole process, but they can do all the process apart from the home visit on the app. They can dip in and do bits, the ID, everything like that. So we have found that the app reduces turnaround times by about 7 to 10 days. So apologies for the noise. I've got some gardeners in the background, not my garden, I hasten to add. And yeah, we've been adapting our case management system just so that it becomes more and more streamlined. We've thrown, I don't understand the IT speak, but robots at it. So apparently the more robots you have, the more efficient the system becomes. So yeah, so we're all ready for volumes to increase. And as Dave quite rightly mentions, with it being slightly quieter, turnarounds are quicker, but I think kudos to Dave. We had, Dave knows which case I'm talking about. Offer came through probably less than 10 days ago, and I think we're completing today on it. And yeah, so thanks, Dave. So we, you know, even on busier times or on quieter times, we know that if it's an urgent case, we can ask Dave, and he'll always push it through if it's able and if it's a clean case. And this wasn't necessarily a clean case; it had special conditions on it, which we're fortunately satisfied.
Fabulous, thank you, Peter. And I'll open it out to the rest of the speakers as well. You know, an opportunity to give an idea of some of your automations in place, potentially client portals or anything like that. Does anybody want to add to that?
Yeah, I'll jump in, Dan. Yeah, for us, particularly this year, if we're cautiously optimistic, the market's going to be a little bit more attractive than it was last year. Certainly leveraging some efficiencies process-wise is massively important. We've got some quite interesting AI now behind the scenes that helps classify documents as they come in and interrogate mortgage offers, and basically frees up our case managers and case assistants to be speaking to clients and spending more time making the journey really nice. I guess ultimately there's still some important SLAs that we need to be sort of conscious of, you know, making sure that home visit's booked in the diary nice and promptly once we get the offer in. So again, any help on the front end from brokers is always welcome there. You know, can the client cancel golf for that particular day or whenever it is we're trying to get them in, and making sure that pack's super clean once it comes back. So has the client got everything they need for that home visit? So once the solicitor returns docs, we can get them off to Dave over at Enact and get that completion date set nice and promptly.
Fabulous. Thank you, Matt. Any more to add from the other guys? If not, I'm happy to move on.
I was going to say is, yeah, you know, we have the portals, etc. What we've also done is we've just recruited more people because we can see where the growth is coming from, and we've been growing over the last 12 months. So we just recruit people and get more expertise in house because ultimately the phones need answering, emails need answering, all that type of stuff. So we've got recruited more people in the new year. That's an ongoing process. And we recruit based on forecasted volumes. So we're always a month or two ahead of the game because the recruitment process can be challenging. But yeah, it's just about having people in the office, expertise, people out on the road, and we base on that. But yeah, as the other guy is saying, it's always about squeezing those extra half an hour out of a process, day two, and then, you know, working closely with the likes of Dave at Enact and your peer group at Connexo as well. It's all about working together and having grown-up conversations about stuff that's going on. So that's how we kind of operate.
It's always quite promising when you hear that people are recruiting, certainly from a market conditions perspective. We've seen it quite dulled down at the moment, and it can be quite tough out there. So I certainly feel for you all that are perhaps generating your own business and spending an awful lot of money potentially on leads. But seeing as there's no questions, and if there is from the room, please do unmute or put it into the chat. But just wanted to ask the question now, to all of you guys, you know, LTVs are slowly starting to come back, but certainly over the last few months, we've seen a lot of clients not being able to proceed because there hasn't been that functionality. And we've seen, you know, lenders get creative with innovations, which is great. We've potentially seen advisors open up a wider conversation about maybe plugging that gap, helping that shortfall, looking at other different financial solutions. What happens from your perspective as a process when you've got a case that's going through and all of a sudden that redemption statement is a lot more than what we anticipated initially, and there is a shortfall? You know, is there a standard process? You know, how do you work collectively with advisors to help that situation? What do you accept? What do you not accept? Because obviously the advice is perhaps slightly changing at that point.
Shortfalls is quite a big issue at the moment, actually, because for the Law Society of Scotland, we've got to carry out anti-money laundering. Now, some people say if only if the money's coming to yourself. Okay, they're looking to change that. It's not quite enforced yet, but if I know it's not coming from the client's bank account, i.e. a gift or a loan, that is an issue as well, because we've got to confirm to the lender solicitors that the money's the client's own. Now, in some cases, if it was a gift of, say, £5,000, they have in the past got a gifted deposit letter from the donor and agreed that that's fine. But it does add another layer of complexity and potential issues to that client, because we're still going to have to see the bank statements, you know, as if we're obtaining the money ourselves to make sure that it's all as it was. So, and some people don't have the shortfall and they're trying to raise money, and we're in the cases they've grown for months now because they either try to sell an asset or they're trying to borrow from family, which again, that just screams, what can we do? You know, this is going to cause major delays and the lender might not like the gift if there's a gift.
Yeah, that's really interesting. Is there anything from Matt or Peter on that one? Any difference in the process from down here?
Yeah, just to agree with Rachel, really, the shortfall side of things, they can be a little bit frustrating, particularly if we're not flagged or don't know about it early on. Sometimes we just don't, because if the lender solicitor's getting the redemption statement, then that generally happens a little bit later on in the process. But the sort of key thing for us is being able to prove where the money's come from, the provenance of the funds. So, you know, sometimes that is quite easy if it's a cash in of a pension or an inheritance payment, but if it's been saved up over years or moved around from account to account to account, it can become a little bit intrusive and onerous. So it's really just flagging that to us early up front if there's any indication that there might be a shortfall, so we can speak to the clients and try and get a fix on where those funds are coming from. And as Rachel said, if it's been gifted or loaned, you know, some of the lenders just don't like that anyway. And if they do, then we need some extra sort of proof there as well that they're not going to be asking for it back in a couple of months' time. So yeah, as with most of the things we've talked about, just get in contact with us early.
Brilliant. Okay. Any more to add? We'll move on to possibly one last question. No? Okay. I think this is one sort of, as the way we see the market moving, you know, I personally see lots of opportunities aligning ourselves with the residential mortgage market space. You know, we've had our industry that's kind of kept itself to itself for a while, but there's such a bigger market out there. And our products, the innovation that we're seeing lower ERC terms, we're seeing enhanced flexibility. From my view, and again, treat me as somebody that doesn't really know the market that well, in the residential space, it's commonplace for one representation for both the customer and the lender. Is there any scope within the lifetime mortgage market for that? Is there anything that we should know from the advisor's perspective? Is there conflicts? Anything that we can help manage expectations? You know, because if a customer's had a residential mortgage their whole life and remortgaged and used perhaps one representation throughout that process, and they ask a broker that query, you know, why do I need individuals? What's the simple answer? What's the solution? Or is there scope for that to change?
I think it's a longevity of this type of mortgage, your equity release, your RIOs, and you're dealing with, I don't want to say elderly, but potentially vulnerable clients. So when you get a RIO, a normal standard mortgage, you don't necessarily have to take the legal advice. I mean, people sometimes do, but I had to remortgage my house and a solicitor was dealing with the lender. I didn't take legal advice on it, but But there's so many issues like family coming in down the line to complain about these transactions. If there wasn't separate legal representation, that could be a nightmare down the line with complaints, because you have to deal with two hats, and I just think that's too much for one solicitor to deal with the lender and the client, especially if they don't align the needs.
Mm-hmm. We obviously want to avoid any
yeah,
conflict. Yeah, of
because
course.
family members down the line, it'll not happen just now, but when they're no longer here or in care, that's
Mm-hmm.
when all the potential issues are going to come to fruition. And if we can see that the brokers advise them financially, we've advised them legally, and then the lender's got their own separate legal representation, I think it keeps it clear, in my opinion.
Yeah, it's obviously a standard. It's there to safeguard clients at the end of the day, and I totally get that. I just thought it might be an interesting topic to cover. Is there any other thoughts and feelings on that? No, swiftly moving on then. It seems quite refreshing that we've not talked about power of attorneys and leased solar panels. So we've probably got out of that quite lightly, actually. But this will be the last call for any cases from the room. You know, please do unmute and shout up if you do have any questions. As always, you often see the people on the pictures at the top of your screen at the events, darting around, but you don't get a chance to actually.
Something briefly on the powers of attorney. Some brokers come to me and say, it's a POA case, fine. The husband's attorney for the wife. That borrower can't sign for both himself and the wife. I've never to date had a transaction go through where the same person signed for himself as a borrower and his wife as a borrower because of the potential conflict there. So if you have a power of attorney case, see that document, because if there's a substitute or another additional attorney, that's better. Whereas if there's not, I've had to cancel transactions. We just cannot proceed because the lender won't go ahead with that. Okay.
I thought we got away lightly not talking about, but
no,
we might
I just had to mention it.
We might as well talk about it now, because it's an area that I'm more recently getting involved in as well. And I think you're absolutely right. We need to be capturing that document, not just grabbing it and putting it in the file. We need to actually be reading it, looking at what the instructions and preferences are. You know, and we also need to remember who is our actual client. You know,
exactly.
The person acting on behalf of your client is not your client. We need to make sure that we're acting responsibly. But yeah, just to open that out to the speakers, is there any other considerations or things you would like to put across as advice, guidance, best practice when it comes to power of attorney cases?
I would also make sure that if it is a power of attorney case, that there is a GP letter on file to say that person could not make decisions regarding refinancing or equity release, just so that that's on file. Because obviously if the person does have capacity but they're still a POA, then the lender would prefer that person to sign, not the POA.
Yeah. They generally expect that if they've got capacity, they're more than capable of signing on their behalf, although you have that luxury. And as you rightly say, if somebody's lost capacity, they'll want to know about any future care provisions for that individual, perhaps if they need to go on to follow-on care should the worst happen or anything like that. But yeah, Peter, Matt, Adam, Dave, any other considerations there?
I think for me, sorry, I'm going.
No, I was saying just speak to us about it, show us the document, let us have a look at it, and we can advise you from there. But I'll let you. Peter's the expert matter on this, so.
You charmer, what are you after, Adam? I think for me, it's purposes is always key. And as Adam says, pick up the phone, check the purposes are correct. And as Rachel said, you know, just because Doris is frail and doesn't like dealing with finances doesn't mean that she doesn't have to sign, unfortunately. The attorney's going to help, of course, fill in the forms, but Doris will have to sign. But most, you know, for us, we are required to provide proof that the person has lost, you know, we have to give undertakings that the person has lost mental capacity. And that is, you know, a very kind of difficult one, a difficult call to make. Doctors nowadays won't provide mental capacity checks or even just a simple letter. So we often have to roll out the experts to help with that. You know, with TFS we like to use, and certainly, yeah, I think capacity and purpose for us is always the key. And the one thing clients will hate the most is having to release the original LPA to us. It's one of the sticking points, and even other third-party solicitors hate releasing the LPA to us to hold the number of run-ins that we have with them is quite extraordinary.
Brilliant. Thank you. I saw you struggling there.
I need a coffee, Daniel.
I think there's a coffee shop behind you, mate. It's outside it.
Actually, yes.
Can I just add a quick addition with regards to power of attorney cases? They can be quite emotive cases. We're talking about vulnerable customers here, and I think it can feel at times like additional roadblocks are being put in the way. The vast majority of these are genuine needs, genuine people, but everybody in the process is required to make sure that they are attentive to vulnerability, fraud, forgery, use of those funds, care of the individual. There are a lot of different areas that need to be assessed and signed off at each stage. So I think there's understanding and patience, and as all the guys have said, getting things done as early as possible in the process will help on those files.
Definitely. There's certainly some dynamics around that as well. And remembering, for you guys as advisors, you'll be dealing with power of attorneys that are not financial advisors. So what they think will be the right solutions for their mother or Granny Doris might not actually be the way to go. So it's having patience, not only with the solicitor partners, but obviously the clients as well. And I've often found that, you know, the power of attorneys are not going in with bad intentions, that's just all they know. So their view, it might be the right decision to take some money out of the estate and protect inheritance in the future. Well, actually, we know we need to be making a provision for care and doing things right by the client. So yeah, the point is there is patience, as you rightly say. It's an emotive transaction. Maurice, I've seen your comment in the chat. I've seen you put your camera on. Are you okay to unmute and talk through that? The last query.
Yeah, hi. I'm just trying to cut the system. With Enact, where we've got a client who is runs out tomorrow, we're trying to get a redemption statement of Bank of Ireland. They're not doing it. They've been told yesterday by Enact. They've been told today by Enact. They've been told the day before by Enact. Is there any other way apart from? Is there any shortcut on this, Dave? Is there something you can help with?
In terms of Bank of Ireland, they are a lender that take probably 5 working days usually to provide a redemption statement as a general case. So they are one of the slower ones. It shouldn't be running massively longer than that. I didn't catch the full details of this scenario. It's not a lender that we have any links with or any contacts with over and above, you know, what anyone would have. So it's probably just a matter of keep knocking on the door and making sure we get that sorted. If you want to highlight that particular case to me offline, then I can certainly have a look.
Okay, thank you. Thanks very much. Sorry,
Yeah.
thank you.
And I'm sure it will be a great hand if anyone on the call has any internal contacts at such a bank to help put a little bit of pressure on.
Banks might want the lenders, the borrower's confirmation. We've had some in the past where it's maybe been somebody else asking for the redemption, but we maybe got the deeds and they were confused. And sometimes we just get the client to raise a complaint with the bank internally, and can they please issue that redemption statement to Enact ASAP? And sometimes them complaining's actually got them to action. Not necessarily that bank, but other banks.
Good stuff. Good stuff. Was that anything from you, Louise? Sorry.
Yeah, could I just go back to shortfalls? Because you mentioned that the lenders aren't happy with gifts as well as loans. Is that because of some sort of future indebtedness and putting the property at risk?
We all muted.
Yes, they're
Okay.
probably worried that they're going to come back and try and claim that money is to be paid at a later date. That's why if they are going to accept a gift, that's why they want that gifted deposit letter, which confirms that it's a gift, it's not to be repaid back, etc., etc. So they're more likely to accept it if it's a gift of a lesser value, than if it's like say 20 or 30 grand. They might not like that because they'll assume that should be paid back.
Right, so even if that's family that provide that.
As long as they've got no connection to the property, like maybe if they're living in it, they might not like that. We got asked, what's the connection with the borrowers? Who is the person gifting and where do they reside? And as I say, I got one through that's 5 grand at the moment, and the son doesn't stay in the property.
Right.
Good
Okay,
stuff.
thank you.
Okay. Hope that was helpful, and thank you for the questions there, Louise and Morris, and the guys in the chat box as well. I'm very conscious of time. We are just over the hour now, so I just wanted to take a second just to work towards closing. But first, before I do that, just a massive thank you to obviously the speakers on call. So Rachael Brandon from Boyd Legal, Matt Taylor from Equilaw, Adam Carnall, Forever Legal, Peter Barton, Barton Law, and obviously Dave Burns from Enact. It's great to bring these sessions. We are going to be doing these sessions on a quarterly basis, as to not do them too often, but I think quarterly is fair enough. But please do, if you join any of the future sessions, bring your questions, do get engaged, and we can treat this as a bit of a workshop where you can come and propose a couple of different questions. All you guys as delegates, you will receive a follow-up email probably later this afternoon. There will be a link to download your CPD certificates, and then this recording, after it's been edited and fine-tuned ever so slightly and branded, we'll be putting it onto our upskill session. Don't miss out any of the future sessions that we've got. And as I say, Sanjay from Standard Life Home Finance is coming on to introduce the new Horizon Interest Rewards Plan next week on the 6th. And then we've got a really interesting marketing session towards the end of the month, perhaps to help you brand and position your advice journey to your clients effectively to those people in retirement and over 50s. But yeah, if there's no more to discuss on this session, I'll love you and leave you. Have a great Thursday afternoon. This is the last day of February. We'll be in the last month of Q1 soon. I hope everyone's well. Have a great weekend when it lands. And yeah, thank you for your time.